Then comes the concept of product cost versus period cost. With its name, it is clear all the costs that are incurred for the production of product, for its storage, for its insurance, all types of cost will be considered as product cost. As compared to it, what is the period cost? In period cost, we can say all the selling and administrative expenses that are incurred to sell that product. Product cost is itself a production process cost. As compared to it, all the selling and administrative efforts that are required and utilized and done to sell that product will be called as period cost. After it, there comes the concept of merchandising company versus manufacturing company. Merchandise company is the company that sell ready products to customers. As compared to it, manufacturing company is the company that sell, that first we can say, that manufacture the product, then sell it to merchandising company, and merchandising company finally sell to customers. So merchandising company is the company who does not indulge in the production process. As compared to it, the manufacturing company indulge in all the activities of production and make final product and give a product. To commemorate these companies, I will explain you the format of income statement and balance sheet. As you all know that income statement is the difference between sales and revenues. And to expand this, sales less CGS, gross profit, selling and admin expenses, then comes operating profit, after it income and tax expenses, interest and tax expenses, and finally net income comes. But for manufacturing and merchandise company, the format of CGS is little bit different. Like if we say for a merchandise company, the CGS will be the combination of beginning merchandise inventory, plus merchandise purchases, goods available for sale, less ending merchandise inventory. This results to CGS. As compared to it for manufacturing company, the format will be beginning finished goods plus cost of goods manufactured goods available for sale less ending finished goods and result will be CGS. So merchandise company use ready-made products in their inventory. As compared to it, manufacturing company start with beginning finished goods. Like these goods came from the production process and then the process of CGS start. As compared to it for merchandise company, there is no need or there is no production process. There is only available merchandise inventory. As earlier, I remember that I told Mariam about a chair store where you go and buy a chair and you ask them for chair. The chair is readily available there because it is a merchandise store. As compared to it, if we go to a manufacturing factory and say we need a chair, then they will do a production process and give us finished good. This is the basic difference between income statement format for merchandise company and manufacturing company. In income statement, the CGS format is different from merchandise company and manufacturing company. Rest of the heads remain same. Now if we come to the balance sheet, in balance sheet again for merchandise company, the format will be assets plus liabilities. We can say assets is equal to liabilities plus owner equity, and in assets there is only merchandise inventory will be there. I'm telling you these things on the base of cost concepts. Rest of assets are also there, like building, like land, like their prepaid expenses. So in balance sheet of merchandise company there will be only asset of merchandise inventory. As compared to it for manufacturing company, assets is equal to liabilities plus owner equity, and here the assets format will be little bit different, like it will be consist of raw material inventory, work in process inventory, finished goods inventory. If you remember, these three types of inventories we have discussed in our recent lecture in lean production method, or we can say lean production stages. For a manufacturing company, the balance sheet assets will consist of raw material inventory, work in process inventory, finished goods inventory. As compared to it, for merchandise company, the asset will be only merchandise inventory, that is called ready made product. Now we are going to discuss about the types of inventories. The first one is raw material inventory. So raw material inventory is the inventory that company purchases to make products. It uses raw material in two ways. One is direct material and other one is indirect material. Direct material is the material that become part of product and can easily be identified. For example, in a chair, the direct material is wood, that is easily identified and we can see easily. As compared to it, in same product, that cannot be identified easily. Like screw, nuts, glue, all these type of material will be called indirect material. This is the basic difference between direct material and indirect material, that all those parts of product that can be easily identified will be called as direct material. Like in a chair, the wood is clearly seen. As compared to it, indirect material are those parts, those material that cannot be easily identified, like screw, nuts, glue, all these type of things. These materials are used in manufacturing of chair, but they cannot be easily identified or we can see easily, but they are also a part of chair or a product. So those will be called indirect material. Then comes work in process inventory. It is also called goods in process inventory. and we can say these are products that are partially completed but not in final completion. In my last lecture, I told you in lean production stages that work in process we took example of pizza manufacturing restaurant, that at the start of the day their work in process inventory is the coating of bread that is partially ready to get complete on getting order, so that is called work in process inventory. Third type of inventory that we discussed, finished goods inventory. It is the inventory, or we can say it is the product that is ready to sell and completed but not sold. All type of type of products or goods that are available in your godown to be delivered or to be get sold to get sale will be our finished goods inventory. We will not put any process of work in process inventory on it, nor a raw material inventory, because the finished goods passes through the stages of raw material inventory, like the material and direct material, through work in process inventory stage, and finally it is ready to sell and complete in complete form. Then comes the concept of labor in manufacturing organization. There are two type of costs. That can be direct labor cost or indirect labor cost. So first we will discuss direct labor. All those labor who is involved in manufacturing of product to finished goods and getting wages oblique salaries. These wages and salaries will be our direct labor cost. As compared to it, indirect labor. These are those laborers who are not linked with product manufacturing process, but move the product to go down. Loading and unloading. So all the payments for indirect labor will be indirect labor cost. To make you clear about the indirect material and indirect cost, there is concept of factory overhead cost. For your ease, remember always all types of indirect cost, whether it is indirect material cost, indirect labor cost, utility bills, will be a part of factory overhead. And we will call them factory overhead costs. It will be easy for you if you understand all type of indirect costs will be called as factory overhead cost. As I told you earlier that all type of costs, all type of factory expenses, whether there is a depreciation of factory equipment, whether it is the utility payment for factory, whether it is a property tax for a factory, whether it is a factory supplies used, whether factory insurance we will pay, all type of costs relevant to factory will be called as factory overhead cost. As well as we will include indirect material as well as indirect labor cost as a factory overhead cost. As we discussed earlier about income statement and balance sheet of merchandising and manufacturing company, one thing is most important that you need to remember and learn in this chapter is cost of goods manufactured statement. It is basically the part of cost accounting, but in this chapter it is important to know how to make cost of goods manufacturing statement, or we can say cost of goods manufactured statement. For it, we will start company name, we will write manufacturing statement, and then the period. For year ended on 31st December 2000. The first thing that will come is the head of direct material. In the head of direct material, we will write beginning year inventory, or we write raw material, whatever easy for you. Then we will add purchases of inventory, raw material, raw material available for use. Then we will less ending raw material, oblique inventory. It will become direct material used. The first head of cost of goods manufacturing statement is direct material. The second head is direct labor. As you all know, the labor is the human. We cannot set its hold it. We will just only pay them. This is the second head. Then comes the head of factory overhead. I will share the format of cost of goods manufactured regarding factory overhead cost. In short, we will write indirect costs. For your memory, I am writing factory relevant expenses. Indirect labor cost, indirect material cost, and this will become our total factory overhead. After adding direct material, direct labor, and total factory overhead, if we sum up these heads, we will get total manufacturing cost, total manufacturing costs. Then we will add work in process inventory, at beginning. It will be a total goods in process cost we will less work in process ending inventory. It will be a so cost of goods manufactured will come. This is a combination of almost three heads at which we will get total manufacturing cost. After we will include work in process inventory at the beginning, it will give us total goods in process cost. Then we will less our work in process ending inventory, and everybody of you know that how the ending inventory of work in process remain, because some portion of goods in process inventory is converted into finished goods and they are transferred to or sold to the customers. So the remaining balance of work in process inventory will be our ending inventory. We will deduct this from total goods in process cost, so our cost of goods manufactured will come. This is all about for this lecture. I will share two questions for you all to solve it. First question will be the classification of cost. That was our first topic of this lecture. Like, you will classify the cost with my given